Well, that had to be the worst thing that's ever happened. I was live streaming a few minutes ago and it wasn't even on the fucking screen. I did a screen share. For some reason, the comments on this don't pop up, and it's frustrating. There was people that said I cannot see your screen, and it's only when I stop broadcasting I can see their comments. So that's one thing that fucking pisses me off. And I screen shared I thought I screen shared. I was looking this direction at the screen, breaking it down, and the fucking trade wasn't even on the screen. So I want to apologize for that. So that's really, really frustrating. I don't like saying it's not my day because I feel it gets worse then, but it's one of those days. So I'm gonna screen share again. I'm gonna try to do it again. I don't know why it didn't. Fucking stupid thing. But I'm gonna try to do it again. I want to thank you as well for joining in. So hopefully this video will add value to you. So what I'm doing again for the second time is I'm gonna break down my trades that I traded today. It has been a red day, like I've said before. So I'm gonna break the trades down step by step for you, and hopefully you see value in it where I went wrong. There was a small green trade. We'll cover that as well. But overall, we're red. Yesterday, like I said, super nice day. Today, not so good. It happens, everyone, okay? People think that you trade the stock market, you're just going to get filthy rich overnight. It doesn't happen that way. Trust me. If you're thinking of getting into the stock market for that reason, you're doing it for all the wrong reasons. It takes a lot of hard work. It takes a lot of work. It takes a lot of days like this where you feel absolutely shit because you're taking red beatings. But that happens. You know, you're high when you're green and you're down when you're red. It's an emotional job, and you just have to learn to control it and how we can get better at it. The most important thing is when you do make bad trades, you have to find the value in them, and that's what we're going to do right now. So I'm going to screen share again. So let's see if this works. See, it would have helped if then I would have known. Oh, hold on a second. No, we Oh, there we go. That worked. Brilliant. Fuck's sake. If you can't laugh, you cry. So here we are. This is worx. This is what I was trying to explain earlier. But now you can see exactly what I'm talking about. And I would like to say, if you have questions, ask them. If you do have questions, put them in the comments. As soon as I finish the video, I'll come in and answer them. Until I figure this out, how to do comments. I mean, I've looked up videos on YouTube how to do it, and I think I can do it, and then I can't do it. So here we go. worx. Low float stock, like I said before. I don't know the exact float because I couldn't find it on TraderDeals or any of the bots. How I know from the daily chart, that's a low float stock. If it goes from 450 to 1140 and there's not a lot of chart, we're messing with a low float stock here. Now, worx did have news, so that's why it was nice. To recap, it looked pretty shit pre-market. It was moving around. I started to lose interest in this once this started happening. So we were flagging out again to, like I said in the other video, is I lost interest because I'm thinking I don't want to get in at this break of flag and it fiddles around with volume like this and fades out. So I didn't pay much attention to it. Now, when it started to break out and hit scanners, I went back to it. It was getting called out again. I put it to get filled here to break a 750. I didn't get filled, so entry denied. Never got filled. It popped up. It was halted. So that number one was frustrating. Now, you could call this FOMO. You could call this chasing because I missed my entry and I kept going again. Anyway, let's get back into it. We were halted. Never, ever buy straight out of a halt, like I said. You buy out of a halt, it comes crashing down. So what you want to do is you want to wait for a pullback out of a halt and you want to get in. So what tactic I used here in this particular trade was 50% of the green candle was a pullback. So if the candle pulls back and still holds 50% of the previous candle, that's a buy point right there. And that's what I done. And it worked. it popped back up and I tried to get out. I got filled at about 8.50 and I tried to get out near $9, just under $9. I didn't get filled. I tried to get out on the ask and I didn't get filled. So what happened then is it pulled back. Now, what I want you to understand is everything happens in the stock market in microseconds. So if you don't get filled on the ask, you have to go up, cancel your order, and you have to try to do it again. In that time, by the time it takes you to go over from your montage up to your order windows to cancel, hit hotkey again, takes seconds. We're dealing with microseconds. You have to be super fast on this. I was a little slow hitting the hotkey to get out. I didn't get filled. So I got here. Tactic again, I'll break down when we coming towards the end of this video. I'll break down the tactic what I used here in more detail. So my position now is 8.50. Okay, we got to pull back. I'm thinking, okay, we're going to hold the $8 here. I took another position. I averaged down. This is why I don't recommend averaging down. If you're a new beginner, you will kill yourself. I was averaging down here for a hope to get a pop back up. With a better entry, we pop back up, maybe make a U shape to new highs, or even I'd get out again on the retest. That didn't happen. We broke $8 and it didn't take too long before we broke $8. Now, at this point, when it broke $8, it didn't leave us much option left. So the mindset and the mentality changes slightly here. And I'm going to explain why. I don't know why on this chart I can only see one line. I hope you can see two supports here. So I hope you can see a line at $8 and I hope you can see a line at $7.50. My point is that I tried to get average in again here at $7.50 off the support and off the pre-market high break, because when it retests, usually where it broke out, it's a usually good sign that we can move again. Now, the reason why I wanted to average down here is because my average up here was about 8.20, 8.15, something like that. I needed a better average. So I wanted to get in here. I didn't get filled. So now I'm thinking, okay, shit, I needed a better average on this solely being is because we have two ways we can go. We can U-shape and we can break out, and now we're talking money. Or we can go up, we can test the $8, and people will short into that. Now, what I wanted to do is average here, give me an average of about 780, 790, and then I would have easily cleared, got out at the $8. A small profit or even a break-even position, depending on the volume and other things like that when we're in the trade. So that was my mindset, was should have got average in here to get out for a break-even, or it's either breakout or bailout mentality here. Is if it breaks out, good. If it doesn't, we need to get out at a better entry. We're never going to, if it starts to fail, we're never going to get our money back here at the 820s. It's not going to happen. So we bought back in on support, hoping that we'd pop back up. It didn't happen. We got a big crash red candle through. I exited here in this position. I took a loss. And that is exactly it for that trade. That's as simple as I can make it. And it did hurt a little bit, let's be honest. But to go back on some of these candle patterns we're reading, these are bearish candle patterns. It doesn't matter the colors. People say, no, it's green, it's bullish. That's not true. That's lies. That's a bearish pattern. This upside down hammer is a bearish pattern. It's green, but it's bearish. This is a doji. Again, it can be a bearish or bullish pattern depending. It's indecisive of what's going on. This tactic I used here on the pullback 50% of the previous candle is usually a great tactic to use, and it worked, but we just didn't get filled. So it was miss our entry. We get in, we couldn't get out. We average in, we couldn't get filled on another average. So it was one of those days that it was kind of going wrong, and we paid the price for it. There's nothing we can do. That's what happens. But we're trying to understand here from it is we have to understand what went wrong. And the best way to do that is I'm okay with taking losses because it happens, okay? Once there's a valid explanation or a reason behind my mistake. If you do not know where you fucked up on your trade, well then that's when it's a loss, a real loss. If you know where you went wrong, it's a lesson learned. So you need to pay an exchange sometimes. You need to take the loss in your wallet for an exchange of information and knowledge going forward. And if you don't have that, well then it's a loss, and that's it. Now I'm going to jump into one more stock I have for you, and I'm going to break this one down. This is ADMA. This was a green trade on our behalf, but we were in the hole, so we didn't fully get out of the hole. So on ADMA is the support here is at 330. It popped up nicely. We were pulling back. I got in support here at 330. It broke through. I averaged in again 324 area with a stop just below 320 in this case on this trade, just slightly below it. So I wasn't risking that much. So again, it worked. We got a bearish candle pattern here. We popped up. I sold into this break of VWAP. The reason being I sold into this is I kind of panicked. I was in a bit of a different state of mind. I needed to recover some of that loss, so I wasn't willing to risk it. So I sold into the VWAP in around the 350 area. So that particular trade is all we're doing here on this one is buying the supports and popping up. Now, SPY was in a good condition today, but normally, okay, if SPY is in a bad condition and you get these pullbacks, now bear in mind, SPY doesn't really affect these little stocks. But if we're talking normal stocks here for people out there who are trading bigger tickers, that follow the overall market, SPY is when it pulls back, like into these areas here, it pops up. You need to sell into them pops, because if the market's in a red condition and it's just bleeding out, you're not going to be getting the big moves on normal stocks for the likes of your Apples, your Teslas, Facebook, all that stuff. You're not going to get them big breaks on them stocks. It's because the market conditions are too bad. So if you are buying on supports and pullbacks, is you want to sell into pops like this. Granted, on micro tickers like this, SPY doesn't affect it. 9 times out of 10, it doesn't affect little stocks like low momentum stocks like we trade. But again, is when we're buying supports, we're minimizing risk. That's the idea of buying supports here with tighter stop losses. I mean, if I'm buying up here, then we have too much to risk. It doesn't work. So we want to get in on the low supports and sell into resistances here, or again highs. That's the name of the game. That's the idea of it. Let's switch back. So that was kind of as easy as I can make it. I just wanted to go through it again. I thought it's valuable information, and that's the only reason why I'm shooting the live again. Other than that, if my live messed up like that again, the way I felt like smashing the computer. I wasn't going to go live again, but it needed to be done, and I needed to be as transparent as I can. When I win, I win, and when I lose, I lose. You have to put your hands up to that to let people know that's what happens in the stock market. It is what it is, and we need to learn from it. I hope you did find some value in today's live lesson. As I said, I am doing one of these every week. I'll be going live tomorrow as well to do a live trade recap. So 2 per week on live, and then we stick to our normal schedule Mondays and Fridays as well with uploads. So I really hope you had some value. Like I said, if you do have any questions, put them in the comments below. As soon as this ends, I'm going to go back and answer your comments. As well, guys, if you are interested in taking any courses, there is a link down below. It's all my stock courses reviewed under one roof. So it's all the courses I've done in my honest opinion, what ones I recommend, and descriptions for you guys. If you are interested in taking a Japanese candle course as well, I have prepared. The link is down there too. There's also some free PDFs and notebooks for you guys as well. It's absolutely free, so go check it out. I want to thank you so much for your support, guys. If you did enjoy this video, don't forget to like and subscribe. Once again, God bless.